Welcome to Forex and Crypto Edge. This content is for educational purposes only and not financial advice. Cryptocurrency, Forex, and precious metals markets are highly volatile. Bitcoin has achieved a monumental milestone, surging past $100,000 for the first time in history. The cryptocurrency reached approximately $108,000 in early December, driving its market capitalization above $2 trillion. This rally reflects growing institutional confidence, with Bitcoin exchange-traded funds adding over 21,000 Bitcoin worth $2 billion recently. The approval of spot Bitcoin and Ethereum ETFs has opened floodgates for traditional investors seeking crypto exposure. The crypto landscape is experiencing unprecedented institutional validation. BlackRock's Bitcoin ETF became the fastest-growing ETF in history, with 11 approved ETFs collectively managing $100 billion in assets. Major asset managers like Brazil's largest private bank now recommend allocating 1 to 3% of portfolios to Bitcoin as a hedge against currency risks and geopolitical uncertainty. This mainstream acceptance signals crypto's evolution from speculative asset to legitimate portfolio diversifier. The political landscape has dramatically improved for cryptocurrency markets. Following the recent elections, expectations for crypto-friendly regulations have surged. The industry spent approximately $135 million supporting pro-crypto candidates through super PACs, with promises to establish strategic Bitcoin reserves and appoint favorable regulators. The regulatory headwinds that plague the sector are transforming into tailwinds. 5 crypto firms, including Ripple and Circle, recently received conditional approval to operate as national trust banks. Market indicators suggest an impending altcoin season. Bitcoin dominance has dropped from 61% to 58%, historically signaling capital rotation into alternative cryptocurrencies. The altcoin market capitalization surged 35% in November, approaching its all-time high of $1.4 trillion. Layer 1 protocols like Solana, Cardano, and XRP have experienced sharp price increases. The altcoin season index currently sits at 63, approaching the threshold of 75 that confirms full altcoin season activation. The foreign exchange market is navigating central bank policy shifts and economic uncertainty. The Federal Reserve cut rates by 25 basis points to a range of 4 to 4.25%, though future cuts appear limited. The US dollar has shown relative strength but faces pressure from moderating inflation expectations. EUR/USD is trading near parity levels around 1.04, while USD/JPY remains volatile as the Bank of Japan signals potential rate hikes. Currency pairs are experiencing heightened volatility ahead of major economic data releases. Gold continues demonstrating its role as a safe haven asset amid global uncertainty, after reaching all-time highs above $2,700 per ounce in late October. Gold has consolidated but remains well supported. Central banks, particularly in emerging markets like China and Russia, continue aggressively building gold reserves to diversify away from dollar dependence. This institutional demand provides a solid floor for prices. Geopolitical tensions, including conflicts in Ukraine and Middle Eastern instability, keep gold attractive to risk-averse investors. Silver presents a compelling opportunity with unique demand dynamics. Trading around $30 per ounce in mid-December, silver benefits from both investment demand and industrial applications. The metal is critical for solar panels, electric vehicles, and electronics manufacturing. Supply constraints are tightening as industrial consumption accelerates while mining production remains limited. The gold-to-silver ratio suggests silver remains historically undervalued, offering potential upside if this ratio normalizes toward its long-term average. Looking forward, several catalysts could drive markets higher. Bitcoin could potentially reach $131,000 based on technical analysis and historical ending wave patterns. Ethereum may target $4,300, supported by deflationary tokenomics. The combination of institutional inflows, regulatory clarity, and macroeconomic conditions favors continued precious metals strength. However, volatility will persist as markets digest Federal Reserve policy, inflation data, and geopolitical developments. Risk management remains essential. Despite bullish sentiment, significant risks warrant attention. Crypto markets remain highly volatile with potential for sharp corrections. Regulatory uncertainty persists despite improved political climate. Traditional finance integration could introduce new systemic risks. For Forex traders, central bank policy divergence creates unpredictable currency swings. Precious metals face headwinds from dollar strength and rising real yields. Geopolitical escalation could trigger flight to safety or risk-off moves. Always position size appropriately, and never invest more than you can afford to lose. Thank you for watching Forex and Crypto Edge. If you found this analysis valuable, smash that subscribe button and hit the bell icon for notifications. Drop your market predictions in the comments below and let's discuss. Remember, this is educational content only, not financial advice. Do your research, manage your risks, and invest wisely. Stay sharp, stay informed, and I'll see you in the next video. Until then, trade smart.